Hello everyone, welcome to our morning briefing. It's Thursday, 27th of June, nearly like the end of the month. So let me start with what's happening today in the currency market. So we have seen yen and Swiss franc actually trading around session lows. So this came after a more optimist sentiment ahead of Osaka meeting. I'm referring to Trump and President Xi meeting on Saturday. So due to the report earlier from social media and publishing houses, there is a tentative trade truce between the two countries, so that actually added some positive momentum in risk assets during the Asia trading. That's why we have seen safe havens actually declining a bit, and so that's why we have seen yen weakening, crossing 108 area, retesting 108.50, and currently in a bit of a consolidation mode with some very dodgy candles, which doesn't really help us to identify any direction. In the meantime, Aussie yen was the biggest mover, spiking to 75.60. So it seems that Aussie is benefiting a bit against this positive sentiment in the markets. And as we have actually, something that I forgot to mention is that this positive sentiment ahead of the meeting is due to the fact that President Trump actually said that he will hold the tariffs, he will hold any additional tariffs at least until the meeting. However, if he threatened at the same time, so a bit of an opposite behavior, he threatened at the same time that additional Chinese tariffs will take place if there is no agreement or any positive development during the weekend. Okay, so other than that, we have seen let me highlight once again that risk, of course, remains in the market. We have US and Iranian tensions still in place. Brexit is going all the way towards no deal. So we have all these actually provide a risk backdrop. So still in the background, nothing really positive, just some intraday and some short-term, temporary, let's say, positive sentiment. So at the meantime, let me shift to US oil. We have seen yesterday on US session, and if I'm not wrong, also Stuart mentioned yesterday in our latest video that US oil spiked to 4 weeks highs, nearly just a breath below $60 area. So that came after the API data inventories, of course, which show the biggest drop so far. Okay, so a big drop in the US inventories is what actually caused the spike. Currently it actually came lower at the 58.60 and now is consolidating up around 59 area. Still holds a support at around 59 though. So on the break of that, 58.60, 65 will be tested. This is the immediate support in the hourly chart, and resistance is up here, just 30 pips, 27 to 30 pips higher. Last but not least, I would like to also to mention Bitcoin. But before I do that, just for you to have in mind during the day, so far we have a very mixed dollar after the rally we have seen on Tuesday on the Fed, on the dovish Fed guidance. So there is quite a mixed dollar trading, so we're waiting and see what will happen. Okay, so we have seen Bitcoin spiking higher. So actually that was that spike higher up to 13,800. That was overnight. So this spike higher was bring actually Bitcoin up to 268% year-to-date rally. But then we had a sharp decline. Let me put the hourly chart. We had a very, very sharp decline down to 11,800. So $2,000 lower. And as we read earlier today, that happened in the Asia session due to the fact that Coinbase side dropped down. This might be the reason why we have seen this sharp decline. So not really sure, but as you can understand, all this rally is just purely on human emotions. Of course, the Facebook Facebook's entry into crypto space, JP Morgan as well, it's something that fundamentally adds positiveness into Bitcoin. However, this sharp rally that we are facing the last few months, it seems that is more or less on emotions, on human emotions, so people jumping in all the time. Currently, a bit of a consolidation, the daily candle is a bit dodgy, close to the open price, big up, long up and down legs, but in intraday picture, the hourly picture looks quite bearish, so lower and lower peaks, so below the 20 period moving average. Support holds at today's lows, 11,834, and let's wait and see what will happen. Okay, so overbought in the daily picture, so let's see. Thank you for watching. So today we have harmonized index of consumer price from Germany, the final gross domestic product from US, some jobless rate from Japan in the middle of the night, along with Tokyo CPI. So the focus is on German data. Thank you for watching and see you later on. Bye bye.